Certainly want to talk to you about respirators as we have in the past, but let's start off sort of with the broader subject of 3M itself and your decision to suspend guidance, to cut CapEx, and to cut spending where you can. Tell me the thinking behind all of those, why you felt the need to suspend guidance and obviously cut spending to a certain extent as well.
Yeah, and good morning, David. Thank you for having me on. Maybe first, I'd just like to take a moment to say how much we appreciate and admire our heroic nurses, doctors, and first responders for all they're doing to fight COVID-19. It's a big focus for us, and I couldn't be more proud of our 96,000 employees around the world and how they've stepped up to lead the fight against COVID. The big topic on our earnings call was also, the outlook as we go forward, and we did withdraw our guidance. There's a lot of uncertainty out there, very fast-changing dynamics as we come into the quarter, as we exited Q1, and so it's just not having clear view of where we are going. There's in lieu of guidance, we laid out that we would give monthly updates on our organic growth. But we did also highlight that April to date, we saw down mid-teens. So that trend and that slowdown that we saw in the Americas and EMEA in particular coming out of March really guided us to be managing our operations generally, focus on execution in the face of what we see in our end markets. And we see that slowdown. So we are managing costs. We are adjusting our operations. In our capital, we continue to invest in areas like respiratory production and other priority areas that are growing and have high demand. But we see slowdowns, other areas that we're delaying capital, slowing down. So pulling back a bit on capital and managing our costs and operational production to the levels that we see in the market.
Yeah. All right. So, people may look at the company certainly in the recent news cycle and say, my God, there's unlimited demand for your respirators. But obviously, autos is an end market for you. Elective surgeries, we were just talking to Northwell Health. That's an important part of your business as well. So what are your expectations in terms of when those kinds of things start to come back, Mike?
Yeah, and you're right. It's been kind of two sides of this. We've seen very high demand in respirators. We've seen high demand in our home improvement and cleaning solutions businesses. We've seen high demand in areas like biopharma, where we're supporting the development of vaccines and therapeutics. And so there is COVID-related demand upswing, and then we're seeing the impact in auto, a little broader in areas like our office and stationary and office supplies businesses, and we're seeing slowdowns across a number of areas. So elective surgeries, elective procedures is one of the areas we've seen a slowdown in healthcare. We've also seen a significant slowdown in oral care as people aren't going to the dentist, not just in the U.S., but in areas around the world. So as we see economies recover, we would expect elective procedures to come back and we would see a pickup. But we did see the slowdown in those areas, and in particular, a sharp slowdown in oral care.
Mike, there is an expectation, I'm sure, that those businesses will eventually come back, as difficult as it may be right now to predict exactly when. But on the respirator side, it would also seem there's going to be a demand for those that stays with us long after even this crisis ebbs. Do you agree with that? You have now gotten up to, or will be up to it as soon as June, I think, a rate of 50 million a month in terms of U.S. production. Is that something you see going forward for years to come?
Yeah, so David, as you know, we ramped up our surge capacity, which got us to 100 million a month by the end of March. And then we're adding additional capacity in the U.S., as you noted, to get from 35 million to 50 million. And we're going to increase again as we go into the end of the year against the demand we see in COVID, coming out of COVID. I think we'll see a longer tail to the demand. And we also expect to see some increased demand in consumers as we go forward, as we get through battling the crisis and directing the vast majority of our production to healthcare workers. We'll see consumer demand be there. We'll see industrial demand be there. We do see, I would say, a continuation of strong demand in that market. Just to size it for you, our respirator business that we're talking about, where the N95s are part of, that's about 2% of 3M's revenue. And we had about 150 basis points of growth in that business that we see for, first quarter, second quarter. So we're, not quite doubling that business, but we expect to see that kind of demand continuing as we go through the year.
All right, Mike, it's Jim. Good quarter. I have an N95, and it's what I wear, and I think it's great. Okay, and I feel very safe with it. I got a bunch of them on Feb 26. Amazon had a lot. What I'm trying to figure out is the timeline here. In April 3rd, you tweeted that you've gone above and beyond to manufacture as many N95 respirators as you could in the U.S. market. Then the president comes back and says, we hit 3M hard today after seeing what they were doing with their masks. What were they doing? What were you doing? And then there was a lot of first responders who got angry at you. You were selling them through distribution, I imagine. I think that's how you sell typically masks. 3M is not a retailer. My father was a wholesaler for 3M for 40 years. What were you supposed to do? Because you had them on Amazon. Obviously, you ran out because they're so good. But I was trying to understand, how did the president think you were supposed to? Or was he supposed to just do National Defense, the Defense Act, and have FEMA call you and say, we're taking everything, no more to China, no more to the distributors? Because it mystified me how he thought business works.
Well, Jim, I would say we're working very well in partnership with the White House. And it has been a very strong partnership in getting us, in case in point, to get the 166 million respirators coming in from our production overseas. That took a partnership with the White House, and I would say that's been very, very strong. In my remarks in our earnings call this morning, I highlighted all the aspects of that. Every piece of this has been important, including the White House in helping us really get in a position to be able to bring product back into the U.S. from our overseas operations, and FEMA with the logistics and the air bridge to get it here, FDA to extend the emergency use authorization. So it's not simple. We had to work on multiple fronts, and we really are working well together. There is kind of a timeline to respirators in the middle of COVID, and if you look at it, when we started the year, a majority of our respirators, the N95s, were going into industrial users. That's the normal business for us. 90% go to industrial users. As COVID and the crisis came up, we shifted that to really the opposite, more than 90% into healthcare. And the only pieces of it that go into industrial are really to support key industries like food and biopharma production and utilities. So it really is a flip. And that takes work to adjust to that. We did it quickly, I would say, in the U.S. Within days of the emergency use authorization, we were 90% into healthcare. So I think it's complicated to really ramp up, not just going our surge capacity online, but then to bring product from supply chains all over the world. It took a partnership, and I'm really pleased with where we've gotten to at this point.
Well, Mike, you make so many things that are really indispensable. Can you make a commitment to have N95s, we're going to have pandemics before, to have factories here? It would be so great if we knew that no matter what, no one could hold us hostage. And I know how you feel about this. I am sure you agree with me, but I know it's hard to do. But how about a commitment like that so that we never have to say, you know what, 3M's got to go to Peking, Beijing, 3M's got to go to Canada. Make it here, Mike.
Yep. Yeah, and that's our model, Jim. When companies move manufacturing overseas, we didn't leave the U.S. We produce everything we sell in the U.S., largely in U.S. facilities. And in fact, we're an exporter. We export over $5 billion in products every year out of U.S. factories. So we have the capabilities here. Now, we had surge capacity in the U.S. for N95s. We didn't anticipate the demand that we're seeing in COVID. And so now we're bringing more production online. We're adding that 35 million a month that we produced in March. We'll take the 50 million with our investments that we accelerated as we came through Q1 in June. And then we're working with the Department of Defense to double that again as we get to the end of the year. Our goal is going to be ready for the next crisis, to be ready to support the fight in the pandemic, and be able to do it out of factories in the U.S.
Interesting choice of words there, Mike. The next crisis. Gartner had a study of CFOs earlier in the week where they said only 8% of CFOs have a second wave factored into their planning scenarios, and only 22% say a second wave is the most likely scenario. What is the next crisis?
Yeah, and Carl, we made the decision to put surge capacity in coming out of SARS. we learned that we were going to be expected to be there for demand and really lead the way. So we added surge capacity then. And we brought that online in H1N1, in the wildfires in California and Australia, in the Japanese tsunami. And so those are the things that we want to be prepared for. And it's not a comment on COVID and how COVID propagates. It's really about being ready for that surge in demand from whatever crisis may hit. And personal protective equipment is going to be front and center again as any of those situations arise.
So, Mike, it's Sarah. You mentioned that consumers are going to want it. We all want N95 masks. Obviously, healthcare workers go first. But when are we all going to be able to get them?
And, Sarah, I think that's going to depend on the demand as it plays out here. You're seeing we are still prioritizing everything into healthcare and the frontline healthcare workers, and that's the foreseeable future for us. You know, in near term, as we ramp up production, it's to go into that. There will come a time where there'll be demand and it'll maybe normalize, and we'll see demand from industrial coming back. We'll see demand from consumers, and we'll be in a better position to serve that demand. It's difficult to see the timing of that from where we sit today. Right now, we're focused on serving those frontline healthcare workers and first responders.
Mike, back to CapEx and your decision to reduce it by between what would be, I guess, as much as $300 to $500 million for this year, or the remainder of it. You know, so many companies are trying to make those same calculations. Are you planning to increase CapEx next year by a commensurate amount that it was reduced this year? How do you think about that?
Yeah, David, I think our CapEx model that we were coming into the year saying 1.6 to 1.8 billion, and that was in line with the return to growth that we talked about in our global markets. So that would be more normal for us. It's a mix of, you know, the installed base and serving that installed base and investing in growth capital and investing in new technology. That's probably a more normal model for investment as we go forward. Pulling back this year, we're really balancing two things. We're balancing a slowdown in demand. We're balancing an increase in demand in respirators, and we want to be ready to be able to ramp back up. So we're managing this very carefully. Some of it is delaying some of our CapEx that we had planned because the growth and end market demand isn't there. So it's not a one-time decision. It's something that we'll stay very agile around and adapt to as we see what happens. We withdrew our guidance because the uncertainty makes it difficult to see. We have to be very much ready to move as we see things change, and that's true for CapEx as well.
Mike, a lot of companies are trying to understand what the workplace is going to look like now. You have 96,000 workers working in offices, working on factory floors. How is 3M adjusting to the new reality in terms of the workplace, and how far along are you in that process?
I would say it has been an adjustment, and there's been some real strong benefits from it. We have about half of our employees working from home. We've implemented new protocols and procedures in our plants, and I think some of that is representative of better capabilities to remotely work and collaborate. Our model, collaborating around innovation, we're looking at how can we bring people together globally in innovation. I think we're going to get some benefits from that as we go forward and even as we return to the workplace. It is something we talk about every day. We're thinking about how do we return to the workplace. It's probably the question that's most often asked by employees. You know, what's going to change? How are we going to come back to the workplace? What will be different? There's a lot, I think, to learn from and take stock of as we come through this. And the tools that we've employed, the digital capabilities that we've accelerated, those will be benefits as we map out how we're going to return to the workplace.
Mike, it looks like to me there was a time when the conversation would have been dominated by PFAS, by the problems, groundwater. When I look at what you released, just like significant litigation-related charges, benefits, kind of deals with some of them. You had a settlement with Wolverine. Is PFAS? It's hard to quantify, but is this groundwater issue behind you, and is something that if I tell people on Mad Money that dividend is safe, the cash flow is great, and I've stated issues on PFAS, but they've addressed it, is that fair?
Jim, we are continuing to proactively manage PFAS. It is not something that's behind us. We are working it all the time. We are, even during COVID, and we're guided by three principles as we do that. We're guided by focusing on leveraging sound science, taking corporate responsibility, and providing transparency. And there are multiple dimensions to that. We've talked a lot about what we are doing, where we manufactured and disposed of PFAS products. We continued to manage that. We have taken a couple of actions in Q1. You mentioned the Wolverine settlement, which was part of the reserve that we took in Q4. And so it is something we continue to proactively manage. We're working with EPA and state-level organizations to continue to move forward. So it will be something we continue to manage.
And finally, Mike, China, coming back online. You have an important presence there, of course. What are you seeing in terms of the economy there? And a lot of companies do seem to be looking at their supply chains differently, even more differently than they did during the fight in terms of trade. And are you doing that as well?
Yeah, David, we are seeing some signs of a recovery in China. We're seeing broader base return to growth as we come into April, so early days of second quarter. It's really across healthcare, our industrial businesses, of course, safety business is part of that, but also our electronics business showing some signs of growth and consumer business as well. So China, we're seeing some positive signs there. China, like the rest of our model around the world, we invest in capacity in China to support customers in China, not to export out of China. We entered there in '84, and we've been building production, and we produce in China most of what we sell in China, and very little of it is exported outside of China. So that model has served us well, and it'll be the foundation for what we talked about in the U.S. It's how we really serve customers around the world, and we don't expect to change that. In fact, this COVID crisis has just reaffirmed the strength of that model as we manage this dynamic, fast-changing marketplace.